Hello, everyone. It's great to see so many of you joining us today live. Thank you for taking the time to be here. You've made a smart choice because this session promises to give you a fresh perspective on a topic that's reshaping the accounting and the finance world. I'm Chetna Kapoor from Seed Global Education. We are a UK headquartered company that facilitates connections between leading global universities and students like yourselves. Our mission is to help aspiring students explore programs, connect with faculty and admissions teams, and make informed decisions about their higher education and career goals. To get us started, could everyone quickly drop in the chat which city or country you're joining us from today? Because that'll just give us an idea where you are based. And thank you for taking out the time. We have some people already posting their areas. We have Bangalore, people from Pune, Delhi. Okay, mainly India right now. Oh, we have somebody from Saudi in Riyadh. Okay, I will give you a couple of more seconds to just put in the chat box which country or city you are joining us from. Today's masterclass is hosted by the Raymond A. Mason School of Business at William and Mary, one of the United States' oldest and most respected universities, known for its strong academic heritage, innovative programs, and close-knit learning environment. We are diving into an exciting topic today, which is the growth of private equity investment in accounting firms, how it's reshaping the industry. In simple terms, we will explore how private equity is changing the way accounting firms operate, grow, and compete, and what this means for future professionals like you. This masterclass will help you understand three things. That's what I understand. Why accounting firms have become attractive investment targets, how private equity influences firm strategy, growth, and risk, and thirdly, what these shifts mean for the future of the accounting profession. I hope I'm right, Professor Moyes, when saying what I just said. We are thrilled to have you two. We are thrilled to have you two with us from William and Mary. First is Professor Moyer's Clinical Associate Professor and Director of the Master of Accounting program. He brings nearly 4 decades of experience with KPMG, where he led major private equity and M&A initiatives. His expertise in auditing, due diligence, and industry strategy gives him a unique lens on how investment is transforming accounting firms today. Welcome, Professor Moyes. We are delighted to have you here. Joining him is Melissa Walters, Associate Director of Recruitment and Admissions for the MAC program. Melissa works closely with international students, helping them navigate admissions, scholarships, and the overall academic journey at William and Mary. Thank you for being with us, Melissa. Before we hand it over to Professor Moyes, let's warm things up with a quick poll question. You will see it pop up on your screen. Just give me a second. Yes. Take some few seconds and just see, take a few seconds to answer this question. How do you think private equity investment is impacting the accounting industry the most? You answering this question will just we'll know where everyone stands. So please take some few seconds out. Okay, I am now going to end the poll and we will see the results. It's right on your screen. I think the maximum amount of people feel that increasing focus on profitability over client services is what is impacting the accounting industry the most. I will now hand it over to Professor Moyes and he will take it ahead.
Thank you very much, and hello to everybody. Let me pull up these slides and see if we can look at them here together. go. Hopefully that's up in front of us, everybody now. Are we looking good, Gina?
Yes, looking good. Yes.
Okay, good. Well, thank you. I'm glad to spend some time with you today and talking about this topic. Very interesting, very current, and moving fast. So this is the agenda for our discussion today. We'll spend a few minutes talking about this. We're going to talk about how big is this trend and is it likely to continue? Many of you probably know what private equity is and how they operate, but I'm just going to go through a quick highlights related to that for those of you who may not be familiar. Why are they investing in accounting firms? Private equity has been around for almost 30 years, but only in the last 5 years have they begun to invest in accounting firms. So why are they attractive targets? And we'll also get into later about the trends of how they do it and why it's only recently that they've begun to invest in accounting firms. How do accounting firms benefit? You just answered a polling question, and all of those were good choices. And we'll talk about those and some others that are ways accounting firms benefit from PE investment. And then we're going to get into a little bit about how these transactions are structured, because there are regulatory requirements that make it very tricky. So in terms of the way that private equity firms can structure and invest and operate an ownership in an accounting firm. And then lastly, we'll talk about some of the risks that have come up both from clients as well as regulators as they think about how this is changing the industry. So how big a deal is this? Well, it all started in about 2020. There were several transactions, actually both in the US and Europe, but it was really in 2021 when the first major acquisition in the US took place by a PE firm, an accounting firm called Eisner Amper. Was invested in by a private equity firm called Tower Brook Capital. And that really opened the door because they figured out the structure that could be used to invest in an accounting firm despite the regulatory environment that accounting firms work in. So you can see from this slide, there have been over 65 PE-related transactions in the last 5 years, including 26 just this year to date. So this may be the largest year of all. Over that time, they've invested over $50 billion in accounting firms, and those firms would have a total estimated valuation of about $200 billion. So very, very significant. So what kinds of firms are they investing in? And well, it's primarily large and medium-sized accounting firms that are attracting these investments, including some of the very largest. And so you can see here that PE has invested in 11 of the 30 largest U.S. accounting firms, including 2 of the top 10, Grant Thornton and Baker Tilly. You don't see on this list any of the big 4 firms, and I think most people feel like the size of those firms is so significant that it's not unlikely that PE could raise the required capital to make an investment in those firms. So we're not likely to see that happen. And you can also see very significant valuation multiples. So many of you may know that in the PE world, they often value companies based on multiples of their EBITDA, which is earnings before interest, taxes, depreciation, and amortization. So a 15 times EBITDA is a pretty significant multiple that we've seen in these transactions. What is private equity? You probably have some familiarity. They've been around for a while, but it's just to highlight it quickly. It's basically primarily capital that is raised from institutional investors such as pension funds, endowments, sovereign wealth funds, ultra high net worth individuals, and they are investing in privately held companies, right? Occasionally they'll buy a public company and then take them private. And those investments are funded through a combination of debt or borrowings as well as equity that comes from the fund. So there's almost always leverage involved in these transactions. Private equity touts their ability to be successful in these investments because they have a longer term orientation. They're not focused on the quarterly earnings estimates that many people follow for public companies. They're focused on long-term value creation. They create value in investees through very active involvement in those businesses, including reshaping leadership, operations, and their financial results. Having said the fact that they do have a fairly long-term view, these private equity funds tend to have a limited life. They usually tell their investors, our plan is to get all of our investments made and sold within a 10-year period. So while they have a longer than a quarterly earnings estimate kind of environment, they do have a plan of exiting these businesses and not holding them for the significant future. So why are accounting firms attractive investment targets? Well, they have lots of characteristics that are very attractive to an investment firm. Recurring revenue. Many of the revenue streams that accounting firms have with their clients recur year after year. And a very sticky client base. Clients who work with accounting firms tend to be very loyal and not change firms very frequently. So that's very attractive. There's also low customer concentration. So they have lots of clients, and none of those tend to be so dominant that a loss of a single client would significantly jeopardize the business of the accounting firm. The other thing that's attractive is the regulatory complexity, right? They're operating in an environment where your companies are regulated. The Securities and Exchange Commission oversees the appropriate reporting and accounting and disclosure for public companies. The Internal Revenue Service and other taxing authorities have rules and regulations over how taxes are levied, and which provide not only tax compliance service opportunities in accounting firms, but tax planning, and as well as other regulatory agencies such as the American Institute of Certified Public Accountants. These businesses are somewhat recession resilient, right? There are lots of compliance services that happen year after year, whether we're in a good economy or a bad economy. There are audits that have to be done. There are tax returns that have to be filed. And so there's a significant portion of these businesses that will continue through even a significant downturn in the economy. The other attractive part of this is a broad suite of services. Accounting firms, while they, in the early days of their founding over 100 years ago, were focused primarily on compliance services, audits of companies, and preparation of tax returns. Over time, they have grown to be significant providers of lots of other services, including very complex tax accounting and very significant consulting services around a broad range of activities. In fact, if you take the major accounting firms in the US, their consulting practices alone are some of the largest consulting practices in the world. The other thing that makes this attractive is it's a fragmented industry. There are over 50,000, that's right, 50,000 accounting firms in the US. Now, many of those are very small, 10-person or less accounting firms, but there's a lot of those in the middle tier as well. And the ability to invest in those and begin to then consolidate the industry provides a really interesting investment opportunity for the private equity firms. So I not too long ago had a discussion with the Public Company Accounting Oversight Board, which is the entity in the U.S. that oversees the auditors of public companies in the U.S., and they have concerns over this trend, and I'll talk about some of those concerns later in my discussion. But the question they asked me is this a fad? Is this going to kind of be a flash in the pan? We're going to have a bunch of these investments, and it's going to kind of go away. And in my view on that is no, it's not a fad. This is going to continue. They figured out the model in terms of how they can invest in these firms, and it's working very well. And the private equity firms have lots of capital to invest. So I think we're likely to see this continue into the foreseeable future. Well, how do accounting firms benefit? Well, there's lots of ways. And I've had some recent discussions with people in some of these firms, and they're very, very excited about what not only the capital it has brought to their firms, but the expertise that the private equity firms bring in terms of helping them understand how to expand and improve their business. So one of the key areas that you see a lot of is once a private equity firm invests in an accounting firm, they often use some of that capital to go out and buy up other accounting firms to expand either service lines or geographies or both, to consolidate and take advantage of economies of scale. So there's a lot of that goes on. I think many of you answered that in the polling question. It also provides them an opportunity to expand service lines and geographies by making further investments. Operational efficiency is a place where a lot of the private equity firms really know how to operate and help the accounting firms drive their business. And some of this includes setting up outsourcing operations or shared service delivery models. One of your polling questions also talked about investment in technology, and that is absolutely a significant part of PE investment. It provides opportunities for investment in technology, including artificial intelligence and significant modernization in their practices. The accounting industry has changed. That was commented on earlier today. I worked in public accounting for almost 40 years, and during most of the time, it was a business that was focused on resources, and the resources were almost entirely people. It was a people-focused industry, and so to grow meant you needed more people. But in today's world, to grow doesn't always mean you need more people. It may mean you need better people, but it also means you've got to have these technology tools that are significantly driving the way these firms are now operating. Also provides capital for talent acquisition. Can we go out and hire some really high-powered people who can bring new skills, new technologies, new abilities to the platform? And more importantly, there's a transformation that takes place. And I'm going to talk about this in a few minutes, but private equity firms have tended to operate in what's called a partnership model, so every partner in the firm is an owner and has a vote in how the firm operates. And so if the firm wants to make a significant investment, if they want to make an acquisition, if they want to add a new service lines, there's sort of a consensus-based decision making because you have so many partners who have a say in how the firm operates. Well, what happens when the PE investment takes place is you have more of a corporate governance model. You've got a board, and the board is given the authority to make key decisions, and they can do that faster. I heard one of the accounting firms who has had a PE investment for several years say that what the private equity investment really provided was an accelerant. Things happened faster. Decisions were made more quickly. There was more accountability around when somebody was tasked with doing something, making sure they were accountable to getting that done. And really decisive leadership that was happening a lot further than when you had this partnership model where you had to get all the partners to agree if you're going to make any changes in the business. Now, there are downsides to that too. We'll talk about some of those as well. But this is a chart. This is two slides here prepared by a law firm that has put together several of these structures in terms of how you put together an accounting firm. So this is really important because the reason that there had not been many accounting firm investments is that in the US, a CPA firm that is providing what is called a test services, and a test services are basically audit type services. A firm that provides those kinds of services normally is required to be owned by at least 50+% of the owners being certified public accountants, okay, by law. And the practice of public accounting in the US is regulated by state, but most states would say if you're going to provide a test services, you must be owned by CPAs. Okay, so that is the model that historically was here. So if you look under step 1 over here, you'll see that, under the old model, the CPA firm was owned by CPAs, and it provided these attest services, which are audit type services, and non-attest. And non-attest is everything else. It's tax services, tax planning, it's consulting, all within one firm. And so to accomplish a PE investment, the PE firm wants to have a majority interest, but they can't own a CPA firm that provides a test services. So what happens is the CPA firm then forms a new entity that is going to provide everything except for the attest services. And they contribute all the assets to that entity. And so when all that is done, what we've got is two firms. We now have two firms. We have a CPA firm and we have a non-attest firm. Now they're all operating under the same umbrella, but they're separate entities. And so the CPA firm is owned by the CPAs and it does the attest services. And the non-attest firm provides all the other services. If you move over to the right-hand side, you'll see that what happens is the attest entity provides services to the CPA firm. So let me go to the next slide. So the way this is structured is once this is set up, the CPA firm provides the attest services, but all the employees are in the non-attest entity. So everybody works for this non-attest entity. And when an audit is done, the CPA firm uses under a service agreement employees from the non-attest firm to do the work and the CPA firm pays a service fee, and they pay a significant service fee. So there's very little profitability in the CPA firm. So pretty much all the revenues end up coming back to the non-attest entity in exchange for the professionals and the support they get to operate the business. So this is it's a very different model for accounting firms. This model is allowed for by the U.S. regulations. The AICPA Code of Professional Conduct has always had this what's called an alternative practice structure, where you can have a CPA firm that's closely aligned with a firm that provides non-attest services. Now, keep in mind that these two entities, in many cases, may be serving the same clients. They maybe have a client where they're doing audit work, plus tax work, plus some consulting work. And the audit work will be done by this CPA firm, and the non-audit work by the non-attest. So some of you may have questions about that when we get to that point. So here's just some additional comments around that, right? There's separating the firm into two entities. They are now operating in a corporate model with a board of directors, and in most cases, the PE investors will have more than 50% of the board seats. And then you'll have a CPA firm that is owned by CPA owners, but it only provides these attest services, which are audited, and it has no employees. The non-attest firm is driven by this board of directors, okay, which is what gives them the ability to operate more quickly. And keep in mind, I mentioned earlier that when private equity invests in a accounting firm or any other entity, that investment is funded partially with equity from the private equity firm and partially with borrowings. So there's leverage involved here. So each of these PE firms has a significant amount of debt on its balance sheet, along with additional capital that the private equity firm has provided. But all the employees between the two entities work for this non-attest firm that has an investment from the PE fund. Now, you see this term in the middle here, compensation scrape. And that's a word that's been kind of tailored to these kinds of transactions. In a normal partnership arrangement, all the profits of a CPA firm under the historical model in a partnership were distributed to all the partners. So effectively, after the profits each year were distributed to the partners, there was no net income left at the bottom, right? And so the problem is that for private equity, they don't want to invest in an entity where all the profits go to all the partners, and they don't have any opportunity to share in the profits. And so part of the arrangement here is that partners in the firm agree to reduce their compensation from what it's been in the past by some amount, and in exchange for some equity in the future. And so what ends up happening is the partners and other employees in this non-attest firm now have equity ownership, as well as, in some cases, options or other equity incentives. And some of those equity incentives are pushed down further in the firm to managers or even senior accountants. So they now have equity stakes in those firms. So it's a significant change in the compensation model. And so basically, what this means is that many of the key employees now have an equity interest in the firm. And at some point in the future, when that private equity firm sells its interest, remember, they want to sell it within no more than 10 years, they're going to get a payout based on increase in the value of the firm, which is something very different that didn't exist prior to these models. So this is a really significant change in how these firms work. Now, so what this means is when this transaction takes place, the partners end up getting a cash payout for some of their ownership interest when the PE firm first invests. And they also have an equity interest in the firm going forward that they can benefit from if and when that firm is sold to another. We've already had one situation where a PE firm invested in an accounting firm, and that PE firm sold its interest to another PE firm just this past year, and there was a significant increase in value of that firm. And so all these folks in the firm got a pretty significant payout. So what are the downsides and risks? Well, this is something that is concerning a lot of regulators that oversee the accounting industry. What are they concerned about? Well, lots of things. So first of all, remember that we've now taken this one CPA firm that had one name and everything is in one entity, and we put it into two corporations. So the firms now have to be very careful about how they communicate with their clients, how they contract with their clients, because they need to make sure that any attest services are aligned with the CPA firm and the non-attest with the non-attest firm. So they may have multiple engagement letters with their clients because they have different firms providing different services. And it also means that they need to be very careful in the way they market the firm because they have two different firms that may have slightly different names. The other really significant challenge here is this transition to corporate governance. So you've got these partners who have had this history of saying, I'm a partner and I have a say in every major decision that this firm makes, to a model where there's a board and the private equity firm most likely has more than 50% of the board. And then there will be some of the partners who have board seats, but others who won't. And that board has the ability to make decisions for the firm, and individual partners who aren't on the board will not have that same authority or input. But remember, they also have this significant equity upside going forward. One of the biggest concerns is there going to be an impact on audit quality? Is the fact that the PE firms are invested and have a significant motivation to drive profitability by expanding, by buying up other firms, by expanding non-audit services. Is audit quality going to suffer? Is the focus on profitability going to mean that the quality of audit is going to diminish? And so time will tell. There's no information at this point to indicate there's any diminishment in the quality of the work. But I can tell you the regulators, I've spoken with the Public Company Accounting Oversight Board, I've spoken to representatives of the Securities and Exchange Commission, and they are very concerned and watching it very, very closely. But at this point have not made any changes in their regulations to change the way they oversee these firms. There are ethical considerations because remember, CPAs have access to lots of confidential data, and they're concerned now that the PE firm, will they have access to this confidential data? They may have investments in competitors to audit clients of the audit firm. And of course, those audit professionals are required to keep that information confidential, but there are those who are concerned about their ability to do that well. The other significant ethical consideration is auditor independence. Auditor independence means if you're an auditor of a company, you must be objective. You must be independent in fact and in appearance, which means you can't have any ties to a firm you audit in a way that you might not be objective in carrying out that audit. And so there are concerns here because the PE firm may also may have ownership stakes in some of the firms that the firm also audits. And there are serious independence considerations, and they've had to structure and monitor this quickly. What happens when the PE firm sells out? How are they going to sell it? So I talked to you about the fact that there's been one sale already. A PE firm invested in a firm called Citron Cooperman several years back. And just this past year, that PE firm sold its interest to another private equity firm, and then more cash came in. But they can also exit a PE firm by selling it to another accounting firm or even taking it public. There's nothing that would prohibit them from taking the non-audit firm public. And so how will that impact the future of the firm as well as the sustainability of that business? So there are lots and lots of ethical challenges, and all the regulators are indicating concern and haven't really decided how they're going to react to it. So this is a major change in our industry. So what does it mean if you're going to work for one of these firms? So I think these firms would say, this would be, working for a firm that has a PE investment might be attractive to entry-level accountants because you have the ability fairly early in your career to participate in possibly equity incentives in terms of your compensation, as well as benefiting from the significant growth that could take place from the PE investment. I spoke with a partner at one firm who has had a PE investment for about, I think, 3 years now, and their annual revenue run rate was 300 million when the PE firm invested, and now 3 years later, their annual revenues are 800 million. So they've increased more than 2.5 times in that period, some of it through acquisitions and some of it through internal growth. So these are very, very significant transactions that are making significant changes, both in how PE firms interact with their clients and also for how entry-level accountants will have opportunities as they work for these firms that have PE investments. So I'm going to stop there, and I know there's some time later for Q&A. I'm going to be happy to take questions when we get to that.
Thank you so much, Professor Moyes. That was truly an eye-opening look into how private equity is not only influencing firm structures, but also redefining professional norms in the accounting world. Now, to help our audience understand how they can prepare for such an evolving, just a second, my screen. Yeah, how they can prepare for such an evolving field. Melissa Walters will share more about William and Mary's Master of Accounting program, including curriculum highlights, admission details, and scholarship opportunities for international students. But before we move on to Melissa, let's take a quick pulse check with our audience. You will see another poll on your screen. Give me a moment to run that poll. Yes, the poll is on your screen now. What kind of support would be most helpful for your study abroad plans? And if you can just take a few seconds to answer that, it'll give us an idea. Is it guidance on applications, financial aid, choosing the right program, or tips for settling abroad? I will just end the poll now and share the results. Okay, I think the highest percentage is towards information about financial aid. Um, I will hand it over to Melissa now, and she can take these questions and address these problems.
All right, let me share my screen with you all. Here we go. Hi guys, I'm Melissa Walters, Associate Director of Graduate Admissions and Recruitment at the William and Mary Raymond A. Mason School of Business. For those who are not familiar with William and Mary, we are the second oldest university in the United States. We were founded by the Royal Charter in 1693, and we are considered one of 8 original public Ivy League institutions. We're located in the beautiful and historic Williamsburg, Virginia, on the east coast of the United States, and only a few hours below Washington, D.C. At William and Mary, our purpose is to deliver a top quality education as one of the nation's leading public universities. We strive to expand the business perspective of all our graduate students as they build skills in leadership and strong communication. Our graduates will also join a tribe of alumni who are making an impact here in Virginia and around the world. We enjoy very strong rankings at William and Mary. We're voted #1 for learning by Bloomberg Businessweek, #5 for best professors by Princeton Review, #13 for networking, and overall we rank #36 for best business schools in the United States. There are many opportunities to learn at the William and Mary Raymond A. Mason School of Business. Our graduate study portfolio offers a full-time MBA, a Master of Science in Business Analytics, and a Master of Accounting, as well as a variety of online degrees and certificates. Our full-time MBA is a 22-month residential program. The first-year experience includes a robust core business curriculum, equipping students with a strong professional business foundation. The second-year experience allows students to select a specialization, which includes marketing, consulting, innovation and entrepreneurship, as well as 3 STEM-designated specializations: business analytics, finance, and supply chain management. There's also a high emphasis on career readiness and job placement through a variety of experiential learning opportunities, including study abroad. Our MBA students are also paired with a leadership coach their first year through our executive partner program, who helps students reach their full professional potential. Our full-time MBA students have a 95% job placement rate, which is a testament to many factors, including our Graduate Career Management Center, who provide personalized career support services to each individual student. Our Master of Science in Business Analytics is STEM designated and is open to all majors. It is a 10-month full-time residential program which focuses on analytics within the context of business decision-making. Students will build their technical toolkit with programming skills in Python, R, and SQL. Meanwhile, they will learn the latest developments in AI and machine learning. And students will also have opportunities to participate in case competitions and live data consultancies. And just like our full-time MBA, our business analytics students also receive personalized career advice, leading to a 90% career placement after graduation and a strong average salary of $86,000 US. Our Master of Accounting is also a 10-month STEM designated residential program open to all majors. And in addition to the advanced core accounting curriculum in the fall semester, students have the opportunity to customize their academic experience by declaring a specialization in one of 4 areas in the spring semester: accounting analytics, audit and assurance, taxation, and valuation and advisory services. Additionally, students have the option of participating in a paid winter internship in place of their spring semester electives. By the end of the fall semester, students will be well prepared to start taking sections of the CPA exam, which is a coveted credential for public accountants in the United States. And once again, our Master of Accounting students have direct access to career advisors and other career services through the Graduate Career Management Center, leading to 100% career placement and an average salary of $90,000 US. After today, if you are ready to begin your graduate school journey with William and Mary, here are the application requirements of all our residential programs. We require an online application, your undergraduate academic record, 2 professional or academic references, your resume and a personal statement, followed by an admissions interview. And all students are considered for merit scholarships upon acceptance. We encourage you to explore our graduate business program portfolio in more detail and consider applying to the William and Mary Raymond A. Mason School of Business. If you have any questions, please feel welcome to contact our office. And I just want to thank you and our seed partners for your time, and best wishes to all of you as you begin your graduate school journey.
Thank you, Melissa. That was wonderful. I will now open the floor for some questions to be answered. The first one will be for Professor Moyes. Professor, the first question is from Nandini Arya, and she says, can we work in regulatory bodies and central banks through accounting streams? What are the job roles which will be hired for the same?
Is the question related to whether international students can work in those job roles?
You can maybe answer for both. Maybe international students' perspective is considered more here, considering the audiences from Saudi, India. Yes.
Yeah. So there are certain clients where the employees working on those engagements would need to be U.S. citizens. For instance, if you're working for doing services for a federal government agency, or in some cases defense contractors. But for the most part, there aren't limitations on international students working on various types of engagements that CPA firms provide, other than those ones. And you could still work in a firm who provided those services. You just couldn't work on engagements that required that the um, that engagement were U.S. citizens. But there are broadly lots of opportunities.
Okay, and just to follow up that, what advice would you give young professionals who want to work at the intersection of accounting, finance, and investment?
Well, I've been a CPA for 40 years, so I think you know what I'm going to tell you, which is that the accounting skills are really, really important to all those areas, right? Because of many of you may know who Warren Buffett is. If you don't, there's a company called Berkshire Hathaway, one of the most successful companies in the US. And if you go online and look at YouTube, there are various videos where he is asked, if I'm a young professional and I want to get into investment or finance, what should I do? And he says you should take as many accounting courses as you can take. So we often tell our students, listen, many of our students who are in the Master of Accounting program are focused on working for one of the big accounting firms, at least to start their career. And of course, those are great skills. But there are also students who come to our program who do not intend to work for an accounting firm and end up working in an investment banking firm, for an M&A firm, for not-for-profit entities, in the corporate world. So it's good training for those other kinds of opportunities. So I would say that, and Melissa talked about the CPA credential, very, very valuable in all those industries if you have that. Very much sought after, even for firms who are hiring folks in the private equity space, investment banking, or finance.
Thank you for that answer. Melissa, the next question is for you. Niharika wants to ask, can you tell her what separates a qualified applicant from a memorable one? Any underrated quality that you look for?
That is a great question. Thank you so much. I would say that we really want to see your authentic, genuine self, imperfections and all. And if you can show us your personality, who you are, and also explore kind of areas of leadership and teamwork experience that you have, and come into the program, I would say having a humble heart and being really enthusiastic and excited to learn, and be open to any opportunities that you have. And we want to see that in the admissions process. We want to see that you are the type of student who is going to contribute well to their cohort and kind of have those qualities that will make them successful in the program. And we really want to see, I would say, between, someone who stands out, just wanting to see, again, that genuine self. We have a lot of students who think they need to be perfect, have the perfect essay, have everything, straight and ready to go. And while that's fine and good, we really do want to get to know you. And I would also say to come to things like this, showing that you're really interested and enthusiastic about the program, show us that you've done the research, that you've studied our program, that you can speak about specific parts of it that you're most excited about, whether that's our internships or CPA prep. So just having some specifics, showing that you did the research and showing who you really are. And I think that's what's going to stand out for us as we evaluate candidates.
Thank you, Melissa. Sir, the next question is for you. Shashank wants to ask, are there any common regrets that you see in students or professionals who are wanting to work in the investment or finance sector?
Common regrets. Well, that's well, I can't think of any off of my top of my head. You know, I sometimes find people shy away from some of these professions because they are very demanding and there are lots of work hours in the early part of your career. And so I would say that there are sometimes people who shy away from it or start and don't stick with it long enough to reap the benefits of the experience that they're getting towards an investment in their longer term future and success.
Okay, and what kind of, just a follow-up question, what kind of industry connections or internship pathways exist for international students who want to work in finance or consulting after graduation?
Well, so several. I mean, Melissa talked about our Graduate Career Management Center. So every graduate business student has an individual advisor who works with them one-on-one throughout the time that they're with us, and they are not only helping them prepare or update their resume or LinkedIn profile, but helping them identify firms in the industry that they're interested in, and also helping them prepare for interviews before they have them with practice interviews. So you're getting lots of support. And the school has a long history of relationships with major accounting, finance, investment banking firms. And so there are lots of opportunities where those folks are on campus meeting with students. And William and Mary, while it's not an extremely large university, has a very, very broad and deep network, not only in the US, but across the world to support those opportunities.
Okay, thank you. Melissa, talking about the elephant in the room, there is a question that is, given the uncertainty around the work visas right now, what advice would you give international students hoping to build their careers in the US after graduation?
I would suggest, remaining hopeful and kind of, it's a really wait and see period for us. Things seem to be changing almost daily. And it's really hard to know from when you guys are ready to start the program, what things will be like when you're ready to graduate. So I would just say stick with things, keep your eye on what's going on. Your concerns are very valid, but we are operating business as usual. And I did mention for our Master of Accounting students, we still have 100% job placement, which includes our global students. And I think that's a testament, again, to the services we provide, but also the industry, which Professor Morris has explained. It has a really high demand. So you're going to be well supported. I think companies are still looking for global candidates. You guys contribute a lot of, diverse backgrounds and thoughts and skills. And I would just remain hopeful and keep an eye on things. But again, we are excited to continue to recruit global students, and we will continue to do that as long as we can. And I also remain hopeful too. So we're all in this together, learning and seeing where things go. But don't give up hope. And I hope that's a good enough answer. I know it's, maybe not as specific as you want, but that's what I can share with you right now.
Absolutely. No, it is very helpful. And it is also reassuring coming from you. So thank you for that answer. Professor Moyes, this is a question that I have. You won't find this probably in the chat. Private equity has clearly brought like fresh capital and growth opportunities to accounting firms. But where do you see the biggest ethical or regulatory challenges emerging in this new landscape?
I think it's one of the things I commented on, which was there's a significant concern that the profit motivation of the PE firm and them pushing the growth of profitability in the non-audit parts of the business will take away from the quality of the people working on the audit engagements, as well as the quality of work that is done there. And so there, and in fact, there's some regulators who are concerned, well, maybe these PE firms don't want to do audit work anymore because it's more profitable to be involved in some of these other businesses. And so I think there's a lot of concerns around. I think the biggest concern probably is around audit quality.
Okay. Okay. There is one question that I see by Alicia in the Q&A box, but I don't know who to address this to. Maybe Melissa can answer, or maybe you can also chime in a little bit. For someone switching from a traditional finance background to a tech-driven field like business analytics, how do you recommend positioning that in the application?
I may turn that over to Professor Moyers if you have any insight on that. If not, I can give it a try.
So I think Melissa's advice was good, and that is, we really want to know who you are and what you're really interested in, right? And so don't try to tailor your application to what you think we want to hear. We like a diverse people with a diversity of backgrounds. We in our Master of Accounting program, we have people who are political science majors and music majors and um, history majors and all kinds of things who have lots of interests. The truth is today that technology is so foundational to any business career, right? We've had some sessions with accounting firms, and the ways they're using artificial intelligence already in their business is amazing. Finance, investment banking. So, technology skills are an interest in technology skills is really important. Now, having said that, firms are not looking for people to sit in a back room and be a programmer, right? The best jobs are people who understand how to use technology to mine data, to gather information, and then know how to use that to make business decisions, good business decisions. Because at this point, AI can't, we can't rely on it to make the decisions, but it can give us clues and data to help us make better decisions. So what this means is that understanding how to use technology is a really foundational skill, but the person who's going to really stand out is a person who can generate that data and then really use it to make good decisions, because we're not going to replace the decision making that needs to take place and that comes from people with technology.
Okay. So then I think I think you have somewhere also answered this question, if I'm not wrong. Somebody has asked, with automation and AI rising in accounting, do PE-backed firms invest more aggressively in tech than traditional ones? I think that's what you just answered, and that's where the trend is going, I believe.
Yeah, I think it is allowing them to invest more heavily. I mean, the big four firms have capital to do it, but the next tier firms, which are also very large, um, don't. And remember, all the profits are being allocated to the partners every year, so there isn't any permanent capital in these firms. So the only way for them to make a major investment is for the partners to agree to give up some of their compensation to make an investment or to go borrow money, right? And those are not great choices that you can get everybody to agree to. But PE's putting in capital and saying, we need to have this and we need to have it now. And with this decision-making model, board-driven decision-making model, they're making that happen. So what I'm hearing from the accounting firms is it's really accelerated their ability to make the investments that will drive their business forward. Where in the old model, they may not have been able to get people on board to get that done.
All right. Melissa, this question is for you. How does the Master of Accounting program prepare students for the evolving demands of today's accounting profession, especially with shifts like private equity investment?
I actually think that's going to be a question for Professor Moyers. So I think that's more his realm. So I'm going to turn it over to him.
Okay, sure. So we're really focused on making sure our students are prepared, and so we have an integrated technology skills throughout our curriculum, throughout all our courses, and the school has invested very heavily in providing tools for faculty and for students. We have an accounting advisory board. In fact, they're meeting tomorrow here. There are alumni who come in who work for the major firms and help advise us what do students need to have that they're looking to hire. So we're going to spend a day with them tomorrow doing that. Having said that, I'm going to come back to the comment I said before, which is, that the decision making and judgment skills are just as important. Technology skills alone are not enough, and they tell us this. What technology means is that people, when they come out of an accounting program into a firm, 20 years ago, may have been doing some more manual kinds of processes themselves before moving into more decision-making roles. And what they need now is the technology can do a lot of those things that we used to have entry-level people doing. We need the people right out of college to be able to use that data and make decisions. So all of a sudden, you're accelerating the kinds of work you're doing early in your career, which is very exciting, but it also means you need to be prepared to know how to make those decisions, and communication skills are also key to that.
All right. I think we have answered most of the questions in the chat box. I will now just ask Melissa to give one final tip, if she can, for people who are in their study abroad journey and who are planning to apply to William and Mary. One final tip that you would give, what would that be?
One final tip, I would say, and this kind of goes back to the poll question that we had about finances being a major concern. Have your financial plan ready. Do not go through the whole admissions process without knowing how you're going to pay for your education. It's really important that you have a plan in place and are ready to have those conversations earlier in the process to make sure that this is the right time for you right now. We do provide, like I said, merit scholarships. Students can work on campus jobs. We have the winter internship, which is also paid. But these are things that are not necessarily guarantees. So you really need to make sure that you are being responsible in creating that financial plan. And I do have presentations on that. So you can always look at our website for upcoming information sessions where I discuss more of those issues. But I would say knowing that you have that strategy in place is going to be helpful for you in the admissions process and helpful for us to make sure that, you know, we know where you're at and where the needs are as we kind of make these decisions and scholarship accordingly. So that's kind of the last piece of advice that I would say, but I cannot reinforce enough. We know that you are all strong candidates. We appreciate that you are here listening to our conversations today, learning more about William and Mary. We're excited to get to know you through the admissions process. And we just want to make sure that, you know, not only is our program the right fit for you, but you are the right fit for us. And there should be very low pressure when it comes to this process. And it's really just more about you and getting to know you. So please keep that in mind. Keep your options open. Think through your decision-making process. What is it that are your must-haves as you look at your schools? And just enjoy it as best you can. Because it might seem intimidating, it might seem scary, but Professor Moyers and myself, our team here, we're not very scary people, so it's okay. Just relax and enjoy the process.
Thank you, Melissa. That was wonderful. Professor Moyes, one last question for you. What's one lesson from your experience that you wish every young accountant or finance professional would internalize early in their career?
Well, so be willing to try something different, right? And so accountants are thought to be kind of conservative, but I found over my career that sometimes there was something new that came up and I wasn't sure whether it was right for me, but I decided to try it, and I got to do a lot of great things simply because I said, you know, I'll try that. I'm willing to try that. So being really adventurous and intellectually curious and willing to try something, a different service line, a different kind of client, you know, something that kind of challenges you in a new way. We always know what we're good at, but something new means that we're going to have to learn something different and maybe we won't be successful. But some of the best things I got to do were because I took a chance to try something different.
Thank you. That was very insightful. As we wrap up today's masterclass, thank you all for joining us and for being such an engaged audience. We hope today's session gave you a deeper understanding of how private equity is transforming the accounting industry and how William and Mary's Raymond A. Mason School of Business equips you to thrive in that future. A big thank you once again to Professor Moyes and Melissa for sharing their time and insights with us today. We look forward to seeing many of you explore William and Mary's programs further. And as always, Seed Global Education is here to support you at every step of your journey. Thank you and have a wonderful rest of the day. Thank
Thank
you.
you, guys.
Bye.
Bye.